Okay, so anyone who's even remotely interested in India right now, you probably feel like we do a little bit. There's so much happening. It's really hard to get a clear picture of where things are actually headed.
Yeah, you're absolutely right. It's like drinking from a fire hose of data points every day. And still, you're left wondering, okay, what's the real story here?
And that's honestly why this latest Indus Valley report that just came out for March 2025, it's like a breath of fresh air for us because they really seem to have gotten under the hood.
Yeah,
Uh,
I completely agree. And I think for you listening, what's so valuable about this report is that it doesn't just give you like a snapshot. It really tries to connect all the dots.
yeah, and so instead of just reading like the headlines, right, you're actually getting like the insider's playbook.
Exactly. And that's why we wanted to do this deep dive with you to break down the report's main insights and, really look at the big themes, the trends, the sectors that are really driving this incredible story of India's economic journey.
All right, so we're going to cover a lot of ground in this deep dive. We're going to look at how the Indian economy has navigated, uh, a pretty tumultuous last 5 years.
Yeah, absolutely. And then we're going to sort of zoom out and look at some of the long-term structural forces that are really shaping things.
Right. And of course, we're going to look at money. So,
Yeah,
where's the funding going in the Indian VC space? And then we're going to deep dive into a couple of really fascinating sectors that the report highlights.
exactly. Yeah. And yeah, I'm really excited to unpack this with you.
Yeah, absolutely. So let's jump right in. Let's start with just a quick recap of India's economic journey over the last 5 years. Now, the obvious elephant in the room is the COVID pandemic, right? I mean, it hit everyone globally, but the report really underscores just how severely it impacted India. We're talking about a GDP contraction of negative 5.8% in fiscal year 2021.
And that's significant. Because as the report points out, that was actually sharper than the downturns that many other major economies experienced during that same period.
Right. So it was a real wake-up call, I think, in a lot of ways about some of the vulnerabilities in the system.
Exactly. And for you listening, I think what's important to consider here is, which sectors specifically were hit the hardest. And the report probably delves into that because that gives you some clues about where the lack of resilience might be and also where future risks could lie.
Yeah, good point. Okay, so then we had the response, right? And the government and the Reserve Bank of India, the RBI, they really threw everything but the kitchen sink at it.
Yeah, absolutely. So you had a lot of aggressive government spending on things like direct cash transfer subsidies. And then at the same time, the RBI slashed interest rates.
Right, that repo rate went down to 4%, which is historically low.
Yeah, I mean, basically the idea was to just flood the system with liquidity and make it as cheap as possible to borrow money.
Right, and the thinking was that this would, encourage businesses and individuals to borrow, to spend, and kind of get the economy moving again.
And it looks like to a large extent that's exactly what happened.
Yeah, the report points to this huge surge in personal credit in India after those measures were put in place, and suddenly consumer loans became like the biggest chunk of all non-food borrowing.
Yeah, people were taking out loans for everything.
Mm.
And, I think that really fueled that very rapid V-shaped recovery. We saw GDP growth bounce back to 9.8% in fiscal year 2022.
But I guess the question is at what cost, right?
Yeah, exactly. Because while that rebound was incredibly impressive, it also created some of his own challenges that we're still grappling with today.
Right. So the report highlights this sort of double whammy of soaring fiscal deficits because of all that government spending. And then on top of that, you have rising inflation.
Right. And, it's a classic case of, trying to get the economy moving again. But then you have to balance that with, keeping inflation under control.
So what did the RBI do?
Well, they had to kind of switch gears. They started hiking the repo rate again to try to cool things down, and eventually brought it back up to 6.5%.
And what was the impact of that?
Well, the report notes that it did start to slow the growth of those unsecured personal loans. Borrowing became more expensive.
Okay, and then another interesting dynamic that the report highlights is this sort of divergence in consumer sentiment depending on where you are in India.
Yeah, so you had urban consumers who are really starting to feel the pinch of those higher prices.
Yeah.
And at the same time, real wages weren't really keeping pace, so they were getting a bit more cautious.
Right.
But on the other hand, the rural sector seemed to be holding up a lot better because, they benefited from good monsoons. There were higher minimum support prices for agricultural products. And of course, those increased government handouts.
Okay, so I mean, that gives us a sense of like the recent roller coaster ride that the Indian economy has been on. But now let's zoom out a bit and talk about some of the underlying long-term structural forces that are really shaping things. And these are the trends that are going to have implications for years to come.
Absolutely. And I think this is where the report really gets interesting for you listening, because it's not just about, what happened last year or the year before. It's about understanding these deeper tectonic shifts.
Exactly. So the first thing they highlight is just the sheer dominance of consumption in the Indian economy. It's consistently been 55 to 60% of GDP for the last decade.
Yeah, and that's huge. It really underscores the power of the Indian consumer market. But for you, it also raises the question of, is this reliance on consumption sustainable in the long term?
Right. And do we need to see, greater contributions from other areas like manufacturing and investment to create a more balanced and resilient economy?
Yeah, and that kind of leads into the next structural trend they talk about, which is the composition of the economy itself.
Right. So services are a huge part of the Indian economy, 54% of GDP, which is, significant.
But at the same time, when you compare it to economies like China, the contribution of manufacturing is still relatively low. And that has, implications for job creation, especially when you have a large and young population.
Right. And the report, I think, dives into some of the challenges and also the efforts that are being made to try to boost India's manufacturing sector.
Yeah, and I'm sure they probably talk about, the whole Make in India initiative and some of the successes and maybe some of the roadblocks they're encountering as well.
But on the flip side, India's strength in services is definitely something to celebrate, especially service exports.
Absolutely.
Yeah.
Our share of global service exports has doubled over the last 2 decades.
And while IT exports are still the crown jewel, there's also been impressive growth in other areas like professional consulting, global capability centers.
Right. And I think for you, the takeaway here is that India is really becoming this, global powerhouse in services. And it's not just about IT anymore. It's about this broader range of skills and capabilities.
Yeah, and I think another really important structural shift that they highlight in the report is formalization.
Yeah, we're seeing more and more of the economy coming into the formal sector.
Right. More income being declared in tax filings, businesses registering for GST.
And even in consumer-facing sectors like jewelry and real estate, you're seeing branded products gaining market share.
Okay, so let's talk about savings. Now, the report says that India actually has a pretty healthy overall savings rate compared to many other countries.
Yeah, but there's a catch, right?
There's a catch, right. There is this worrying trend of declining household savings, particularly financial savings. And what's making this even worse is the rise of household debt.
Yeah, and I think this is a really important point for you listening because the report actually says that the ratio of household debt to GDP has hit an all-time high.
And a big part of this is because of that boom we talked about earlier in those small ticket personal loans from NBFCs and all these digital lending platforms.
Right. And so while access to credit is a good thing, too much debt, especially if it's growing faster than incomes, can create real vulnerabilities both for individual households and for the economy as a whole.
Right. So this is something to watch very closely. Okay, we've talked about the economy journey, these long-term structural trends. Now let's dive into the money. What's happening in the Indian VC space?
Yeah, so according to the Indus Valley Report, it's a market that's kind of recalibrating after that, red-hot period we saw in 2021 and 2022.
Right, and globally, things have cooled down a bit.
Yeah, in the U.S., there's been a lot of activity and funding going into AI-related startups. But in India and China, things have been relatively muted in 2024.
And in India specifically, while VC funding has ticked up a little bit recently, it's still well below those peak levels.
And the report suggests that a key reason for this is a lack of late-stage capital.
So what does that mean for those more mature startups that are looking for, big rounds of funding to really scale up or potentially exit?
Well, it's definitely a tougher environment, and they might have to adjust their growth plans or, really focus on demonstrating strong fundamentals to attract investors.
Yeah, so it's a more, I guess, discerning market now for investors.
Absolutely.
But the early stage funding scene is actually pretty dynamic. So the report talks about how seed funding has evolved. We're seeing fewer deals overall, but the average check size is actually going up.
Yeah, they actually coined this term mango seeds for these seed rounds that are over $3 million.
And apparently these mango seeds now account for like half of all seed funding.
Yeah, and it seems like a lot of this is going to second-time founders. People who've already built and exited successful startups.
Right. So investors are basically placing bigger bets earlier on, but they're being more selective about who they're betting on.
Exactly. They're looking for those founders with a proven track record. And, the average seed round now is around $1 million, which is 3 times what it was in 2017.
Wow. So it's a pretty dramatic shift. And then we have this interesting phenomenon of MicroVCs that are emerging.
Yeah, so these are smaller funds, that are kind of filling the gap between angel investors and those more traditional seed funds.
Right. And they're focusing on those really early stage companies, maybe first-time founders, niche sectors like sauce, deep tech, consumer startups.
So for you listening, what's interesting about this is it means there's more support and capital available for these, really early stage ideas. And it kind of democratizes access to funding a bit.
Right. Okay. And then if we look at Series A and Series B funding, so those crucial follow-on rounds after the seed stage.
Well, the report says that check sizes have been pretty stable, but there are fewer deals happening and the time between rounds is getting longer.
So it sounds like investors are being more cautious.
Yeah, they really want to see traction. They want to see strong business models, a clear path to profitability before they commit more capital.
Right. And at the late stage, those really big rounds, the $50 million plus rounds, they're still pretty subdued.
And here's a point that might surprise you. We often hear about India having over 100 unicorns, those companies valued at $1 billion or more. But the Indus Valley Report actually has a more conservative estimate.
Yeah, they think it's closer to 91 companies that actually meet that valuation.
Right. So they're basically saying, let's be a bit more realistic about these valuations.
Good point.
And then on a more positive note, they talk about this interesting trend of reverse flips. So these are startups that had initially, incorporated outside of India, maybe in the US or Singapore, but now they're choosing to move their base back to India.
And why is that?
Well, it seems like they're attracted by more favorable public markets. The regulations might be more startup friendly.
Okay, so that's a good sign.
Yeah, it shows that, India is becoming a more attractive place to build and scale a business.
And then one last point on funding, because equity funding is getting tougher. The report says that more startups are turning to venture debt as an option.
Right, and for those of you who aren't familiar with venture debt, it's basically loans that are specifically designed for startups.
And it can be a good way to extend your runway without having to give up too much equity.
Especially when equity funding is harder to come by.
Okay, let's get into some specific sectors now. And the Indus Valley Report has these really great deep dives into a couple of really dynamic areas. And the first one that really caught our eye is quick commerce.
And for good reason. The report calls it India's fastest growing industry segment ever.
The numbers are just mind-blowing, right? 24 times growth in order value since fiscal year 2022, and user bases are doubling year on year.
And it's not just about the growth. It's the way these companies are changing the game. Players like Blinkit, Zepto, Instamart, they're not just delivering groceries faster. They're basically reinventing retail.
Yeah, and they're really giving those established food delivery platforms a run for their money in terms of monthly active users.
So how are they doing this?
Well, they've really figured out how to tap into this need for instant gratification. And they're doing it by building these dense networks of dark stores, those small warehouses that are strategically located within cities.
And they're expanding aggressively, not just in the big metros, but also into tier 2 cities.
Right. And what's really interesting is that the unit economics are improving significantly. Blinkit is already reporting positive contribution margins, and Zepto is hitting store-level profitability faster than anyone expected.
Yeah, so it's not just about growth at all costs. They're actually starting to demonstrate that this model can be sustainable and profitable.
And the report gives some really good reasons for why quick commerce seems to be working so well in India. One is that India, has historically had a poor market for modern retail, so they're kind of leapfrogging that whole traditional supermarket, hypermarket phase.
Right, and then you have other factors like relatively low labor costs, very high population density in cities, and of course this growing desire for instant gratification.
And it's not just groceries anymore. Quick commerce is quickly expanding into other categories, becoming like this new everything store.
Yeah, you can order pretty much anything these days and have it delivered to your doorstep in minutes.
But the report does sound a note of caution.
Yeah, they're saying that those super ambitious projections about future user growth and dark store expansion might be running into some limits.
Right, particularly within that India One consumer segment, those more affluent early adopters.
And they even suggest that we might see a future of quickish commerce, where all e-commerce platforms just speed up their delivery times.
So it'll be interesting to see how that plays out. Okay, let's move on to another super exciting area, artificial intelligence.
Yeah, and this is where I think things get really interesting because the report talks about a real shift in sentiment.
Right, leading up to late 2024, there was this sense that India was lagging behind in the global AI race.
But now there's this growing belief that India can not only adopt AI, but actually build its own foundational models and technologies.
And what's driving this optimism?
Well, a few things. First, the Indian government is putting serious money and effort behind this idea of AI sovereignty.
Right, they want to develop homegrown large language models, LLMs, which are kind of the building blocks for a lot of these advanced AI applications.
And the report points to the success of India's digital public infrastructure, the DPI,
Yeah.
things like UPI for payments.
Right, and also ISRO, the Indian Space Research Organization, as kind of models for how India can achieve, frugal innovation and strong public-private partnerships.
And I think these examples are really inspiring because they show that India can solve big, complex technological challenges in its own unique way.
And while a lot of Indian AI talent is currently, working in the US and other global tech hubs.
There's still a huge and growing pool of talent in India, and access to things like GPUs and data centers is improving.
And we're starting to see some really impressive consumer AI stories coming out of India.
Yeah, startups are creating AI-powered tools that are not just successful in India, but globally, and they're generating significant revenue.
Okay, so before we wrap up, I want to touch on these two really interesting emerging playbooks that the report highlights for anyone who's doing business in or with India.
Yeah, so the first one is this evolved India 2 playbook.
So it's moving beyond just translating products and services into Indian languages.
Right now, it's about really understanding the needs, the price points, the cultural context of the next billion internet users in India, the India 2 segment.
Right, so it's about rethinking things from the ground up.
Yeah, so you're looking at things like, pricing models, maybe prioritizing voice-based interfaces, incorporating microtransactions.
And this is crucial because, the India 2 segment is very different from those early adopters in India 1.
Right, and you can't just take a product or a service that works in the US or Europe and expect it to work in India.
And then the other playbook they talk about is diaspora marketing.
Right, so they highlight this massive, affluent, and influential Indian diaspora all over the world.
They even call them India.
And they emphasize that, this is a really significant and growing target market for brands.
All right, so Indian businesses have this incredible opportunity to tap into this global network of consumers who have strong ties to India.
And they have a lot of spending power, and they can really influence trends in different markets.
Yeah, so it's a really smart strategy. Okay, so as we kind of step back and look at the big picture here, what are some of the key takeaways and challenges that the Indus Valley Report really underscores?
Well, I think it paints this picture of an incredibly dynamic and fast-changing Indian economy.
Yeah, we're seeing phenomenal growth in sectors like quick commerce, huge potential in areas like artificial intelligence.
But at the same time, there are these structural issues that need to be addressed.
Right, the declining household savings, the rising debt levels,
Yeah.
the need for greater formalization.
And I think the report really drives home the point that you have to understand the nuances of the Indian consumer market.
Right, especially this distinction between India 1 and India 2.
Absolutely. They have different needs, different aspirations, different spending patterns.
So you can't just have a one-size-fits-all approach.
Exactly. And I think, ultimately the Indus Valley Report is a really valuable tool for anyone who wants to understand the complexities and the opportunities of the Indian economy.
Yeah, it's a must-read for sure. So as you're thinking about everything we've discussed here, I have a question for you and for everyone listening.
Okay, alrighty.
Out of all the trends that we've talked about, the rise of quick commerce, the potential of AI, the changing funding landscape, which one do you think is going to have the biggest and the most lasting impact on India's growth story?
That's a great question and a tough one to answer. But I think for you listening, I would encourage you to really dive deeper into that distinction between the India 1 and the India 2 consumer segments, because understanding how businesses are adapting their strategies to effectively serve these very different groups is going to be crucial for unlocking future growth in India.
And it's also worth thinking about the ethical implications of this, rising personal debt and the role of these digital lenders. And, how can we ensure responsible lending and borrowing practices?
Yeah, that's a crucial question to grapple with. And it's not just about economics, it's about the well-being of individuals and society as a whole.
Thanks for joining us for this deep dive into the Indus Valley Report. I hope you found it insightful. And as always, we encourage you to continue exploring these topics and engaging with us. We'd love to hear your thoughts.
Yeah, thanks for listening.
See you next time.
See you.